What's up, everybody? JDew and Jonah, the banking bros at the Cash Compound, here to talk through the 3-cup setup. And today we're focusing in on the first cup. Cup number 1. Jonah, tell them what it is.
Yeah, we're going to talk about the premium deposits. It's going to be awesome. Stay tuned to hear more about it.
We are back, the banking bros here, talking to you today about cup 1 of the 3 cups that we call the 3-cup setup. And Jonah mentioned that it is the premium cup. Sometimes we use the word deposits for this cup. Jonah, tell them what that means and what this cup is all about.
Yeah, so sometimes that can be confusing for the average person, but here's what's happening. Here's what's going on. So once you have the right insurance policy, what you do with that product, the actions that you take, a lot of times we refer to as banking.
Yes.
And again, it's not something that we made up, but R. Nelson Nash, very famous author that we refer to a lot of times because he wrote Becoming Your Own Banker. He refers to this as banking.
Yes.
Again, it's referred to like that because it's really a mimic of the conventional everyday bank. But your premium deposit, your premium, represents the deposits that go into a bank account.
Yes.
And so that's what we're going to talk about today. There's a lot of cool features about premiums, about depositing into a bank, especially if you're the one who owns the bank. So we're going to walk through a couple.
And the cool thing about these personal banking systems is you do own the bank. You're in control and you have access to what it does. So the cup that you have got to put money into used to be thought of as a bill, but we're going to tell you why it's super spectacular and why you love to put money in there is now a deposit. The money you put in there is cup number 1. So because you put dollars in cup number 1 in premium, the insurance company has to create and populate cups 2 and 3 for you. Those are for other videos. Be sure you check them out. But let's talk now about the money you put in there, Jonah, and why and what it's going to do.
Sure. So one of the best features about cup number 1, one of the things that I love the most, I love to point out to people the most, is that cup number 1 earns interest. This is where, in the contract of your insurance policy, so I say this to people all the time, you don't have to take our word for it. Sometimes you hear things that are just a little too good to be true, right? Or the cool thing about the policies that we're talking about is all of this is written down from your insurance company in your policy contract. So in the contract, it states that you are actually going to be paid interest on any of the premium dollars, any of the deposits that you put into this policy. And that is a huge, huge factor of banking, that they will pay you interest on this money right here. That's a really, really, really big deal. Of course, it comes into more of a play when we talk about cash value, the money that the insurance company gives you, because it's kind of, you can see it on our screen here if you're watching, and if you're not, I'll just talk to you and walk you through it, is that your cash value that you can take out is actually a different cup, different video even, different podcast episode. So we'll talk about that. But the cool thing is, again, the fact that the cash value is a different cup means it's not your premium. It's not the $20, the $200, the $2,000, the $20,000 that you just put into the policy.
That's very important.
That's a huge deal.
All right, so ladies and gentlemen, once again, this is cup 1 of 3, and the insurance company will take care of the other 2 cups. And that means every time there's money put into the premium cup, when you're paying your monthly payment of a premium or deposit, your annual premium, however you do it, the insurance company is the one putting money in the other cups. You also want to be aware of that. And the money that goes in cup 1 earns interest, like Jonah said. It's a guaranteed interest rate in a contract the day before you start it. Yep. They're going to send you that paperwork. You'll be able to sign off of it and say, yes, I know what this is going to grow to. But not only that guarantee is cool, there's also dividends. Tell us how that works.
Absolutely. So dividends are kind of like bonuses that your insurance company gives to you. They give you one each year. They kind of give it to you at the 11th hour. It's at the end of your year.
Yeah.
So if you're just getting started today, you're not actually getting a dividend for probably 11 months.
We just got in the game. Let them wait a little bit to give you the profit.
But you will get one this year, just at the end of the year. And the dividend is given to you based on how much deposit money, premium money you have in your policy.
And
that's
how
a
long
really big deal.
it's been there.
And how long it's been there. It's a really, really big deal. So while you're having that guarantee, that contractual obligation that your money's going to grow, on top of that, they're going to throw in a bonus, a dividend. And they'll actually put that dividend right here in this cup as well, which is a really big deal because, like Jeremiah was saying, anytime money goes in this cup, the other 2 that the insurance company takes care of are populated or filled.
Yeah.
So it's a really, really huge deal. So this cup, where you put your money, that's where it's guaranteed your interest, and that's what you're giving your dividend off of. So we tell people all the time, if you know that's going to happen, how much money are you trying to put into your premium deposit? And of course, the answer should be
as much as I can.
As much as I can, right?
Right. Yeah, because not only is my money going to have a guaranteed growth rate plus dividends, we only use mutual companies, and mutual companies mean that they're going to pay, when they have profits, dividends to policy owners. Well, who owns the policy?
You do.
You do. I do. We own the policy. We're the policy owners. So the dividends are going to get paid back to us, and we're going to check the box and make sure, hey, put them right here where we like it. And they're going to help us along the way. It's not even money you have to cough up.
Right. It's very cool. We talk a lot about making sure that you're not taking any additional risks. And I think that this premium deposit is an awesome example of that, because at no point was I at risk of losing my premium, at risk of market going up or down, right. and I made some, I lost a lot, whatever it might be. It's just not happening here. So we talk a lot about how we've kind of been conditioned and taught to take a lot of risk with where we put my money. But if you put your money inside these banking policies, these whole life policies from mutual companies that pay dividends, you're actually kind of eliminating that I take risk aspect.
Right.
From your life, and that's a really, really big deal.
Now, sometimes, here we go, here's the kind of second level that I want to ask you about. Sometimes folks are asking, like, hey, how much does it cost? How much do I put in there? And they're trying to figure out, like, what are you going to tell me I have to put in Cup 1? What would you say to those folks?
Yeah, I kind of give you the same answer I said earlier, right? So I said, it doesn't matter if you're putting in 20, 200, 2,000, 20,000, 200,000, you actually can put in whatever you want into your premium deposit. So here's what I'd say, just to help you out at home. You might be thinking, oh my goodness, if they're going to pay me interest, if they're going to put dividends, I want to get $100,000 in this cup. Well, the question I've got for you is, do you have $100,000 to put in the cup?
Right.
If you do, awesome. And if you don't, then you can't do that. Where are you going to get the money from, right?
Right.
But so that's why we're telling you now, and if you haven't heard it before, you actually tell us how much you want to put in the cup based on what you've got. What you've got available, what you've got sitting around.
So once again, ladies and gentlemen, this is a banking system that you are in charge of and you control. So when you're ready and you understand what's going on in premiums and premium deposit dollars, like we say, you get to pick what goes in there over the course of your whole life. So that is something that is completely up to you. It's not something we're charging you. Don't send us any money. Make sure that you're telling us, hey, I want you to set up something for me that I'm going to put X in per month or X in per year or something like that. It's completely up to you. The premium dollars are guaranteed to have a compounding effect that affects Cup 2 and 3. And make sure you check out those videos to understand what the insurance company is going to do for you over here. So that's our first cup, the Premium Deposit Cup.